But I guess any sort of emerging market conversation, we need to start off with the U.S. dollar. What do you think is happening? Is this rally just a sort of temporary period of short covering within a longer-term bearish trend, or is this the start of a longer-term reversal?
I agree with the former, I think, David. I think right now what you're seeing is that the short-term dollar bounce is clearly of unwinding of the shorts. And then we're also seeing some of the rates being more correlated with the dollar movements, and obviously some of the actual flows that we're actually seeing is actually being more supportive of the dollar. But on a longer-term basis, we always see that the dollar needs to be driven by rates. I mean, and when you actually see where the long end is, the long end is still where we see capped at 3% because there's no inflation. Yep. Last night's CPI report confirms us that there's very minimal inflationary pressures. And the other thing that remains to be a risk for us is there's just no term premium in the market. There's no compensation that is required in order for the long end to move higher. So in that type of scenario, we think because the rates are not supportive of the dollar, going forward, we still believe it's going to be a bearish mode. And then that's going to be supportive of the EM markets.
What happens to the Fed, though? Because recently we've seen the ECB, the BOJ, yesterday the RBNZ, the Bank of England as well yesterday. They've all started to tilt a lot more dovish. Does that force the Fed to I guess, take stock and not proceed as much, not as fast?
Yeah, I don't think so. I think, obviously, most of the economies that you mentioned, David, where the ECB, the BOE, and obviously in Australia and New Zealand, their growth macro stories are turning south right now. And obviously parts of that is the exports trade that's not actually coming through. But in the U.S., we're still seeing relatively decent growth. I mean, second quarter, we expect a rebound. Most people expect the first quarter to be a blip, and then second quarter is going to be a rebound. But more importantly, when we actually look at some of the numbers, the second quarter is going to be a rebound on the CapEx side. And that, to us, is actually a good indicator that it continued to be an above-trend growth. So that's why I think the Fed is not going to move towards the dovish side and actually keep 2 to 3 additional rate hikes coming in this year.
Ben, I want to talk about the ringgit because I've been tracking developments here in KL. Of course, Mahathir Mohamad, not a fan of forex traders. He calls them forex manipulators. I mean, how concerned is the market about him coming back to power? How will that impact how they play the ringgit?
Well, I think a couple of things to note is, yes, I think there's going to be short-term volatility, but at the end of the day, we're not saying that this is an opposition party where it's totally different from where the ruling party was. I mean, at the end of the day, Prime Minister Mohamad was part of the ruling party. What is most going to be concerned is basically how he's going to shift the reforms in a way that, on the one hand, he's pretty much confirmed that he's going to abolish the GST. The GST was a big impact because the GST drives around 44 billion ringgit, basically, of inflows last year into the fiscal revenue side. That's 18%. So if you take that out, and then on the other hand, he obviously wants to push through with minimum wage hike and then obviously some fuel subsidies. Both of that to us means that it's going to be more spendings on the fiscal side that's going to put pressure on it. So it's really going to depend on how he's going to work with the economics team to actually get more sustainable fundings, possibly on the FDI side, on the investment side, to actually offset this. But I wouldn't see this as really as a big political situation that's going to alter our view. We still like the ringgit on the more longer-term view because this is the market where it's the most correlated with oil in terms of EMA Asia. So that's where I still see it to be a longer-term play.